Hedge funds, venture capital, private placements. Ah, yes, it's the world of investing that's open only to the wealthiest of investors, until now. I'm Bryan Ellis. I'll tell you why the most hush-hush of investment opportunities are taking to the streets for everyone to see right now in episode 139.
You're listening to Self-Directed Investor Radio, America's only podcast exclusively for affluent, self-directed investors, where each day of the week you receive innovative investment strategy and deadly accurate market analysis that's untainted by Wall Street and unblemished by government propaganda, all in 7 minutes or less. Coming to you now from iTunes, Stitcher, and SDIRadio.com, here's your host, Bryan Ellis.
Hello, SDI Nation. Welcome to the podcast of record for savvy, self-directed investors like you. You know, as I sit here behind the SDI microphone, I'm struck by the sheer enormity of the opportunity that's available to smart, well-connected investors like you. Case in point, just yesterday I met with a guy who owns a company and who's built a portfolio of over 50 single-family rental properties, nearly all of which are yielding 12% or more per year from cash flow alone, sometimes much more. And that's assuming full purchase with cash, not one of those hocus-pocus things where the high return is only because of taking on mortgage debt. These properties are just winners, high yielders, and very, very attractive. But you know what? This guy has a problem. He and his business partner are fighting in a really big way, and he's got to unload the portfolio, as in he has to do it. Those are the terms of the mediation between the partners, and he's got to do so under terms that are, shall I say, rather unfavorable to him, but rather favorable to the buyer. And that buyer will be me, and a small number of my most decisive clients who are willing and able to act quickly. So here's the deal. I've got exactly 19 properties available now with these beautiful characteristics. Characteristic number one, very high cash flow. Like rents in the $750 to $800 a month range versus purchase prices in the $50,000 range. Characteristic number two, these properties are totally newly renovated with brand new inspections from the city and certifications plus a 1-year maintenance warranty. Characteristic number three, tenants are already in place with 100% reliable third-party rental payment guarantees. That means you never miss a payment. Characteristic number four, there are experienced, competent, and reliable property managers already in place for these properties. And characteristic number five, you can get these properties below their retail value. My friends, if you're looking to build some incredibly reliable and very low-stress cash flow with extremely attractive cash-on-cash ROI, then here's what you do. If you're already on my top picks notification list, then I've already sent you an invitation to learn more about this opportunity on a webinar I'm giving this week. You'll want to see that webinar right away because I have a very limited number of these properties, 19 to be precise, and they're going to go very quickly given the attractiveness of this opportunity. And if you're not on my top picks list, then right now, text the word top picks with no spaces to 33444. Again, just text the word top picks, spelled TOPPICKS with no spaces, to 33444, and I'll immediately send you the information you need to get on that webinar. And when you get that, register immediately. This is a beautiful opportunity, and I hope you won't miss it. So we've all heard of these fancy hedge funds and private equity firms that are the exclusive domain of the uber wealthy. And many investors who are certainly affluent, but maybe not ultra wealthy, well, many of them have certainly longed for greater access to some of these elusive opportunities. Well, that wait may be over to an extent. In the last couple of years, the law has changed such that one opportunity has become available to some of those investment funds that was never before available. General solicitation. That's a fancy term for advertising. Previously, it was illegal for non-publicly traded investment funds to advertise themselves to the public. That's because, with just a few minor exceptions, investing in those funds was limited to one group of people, accredited investors. Many of you, my dear listeners, are yourselves accredited investors. It basically means that as an individual, you have a net worth of over $1 million excluding your home. So now, many of these investment funds have the option of advertising to the public to seek out new investors and get more business for themselves. But the truth is, I don't think that'll really make much of a difference in the long run. Unaccredited investors simply can't afford the minimum investment in many of these funds, which is usually around $100,000 to $250,000 on the lower end. But here's where there could be an interesting impact for the thousands of you in this audience who do meet the standards of accreditation, but who are not currently privy to any of those types of opportunities. I suspect you'll see a growing number of private investment funds begin to advertise their services per the new rules. I think this is a good thing, More choice is always a good thing for consumers, including consumers of investment opportunities like you and me. And while advertising in and of itself is certainly not a standard for evaluating the quality of such opportunities, there's no doubt that increasing competition in that world is a good thing. And I'm equally certain that increasing the opportunities available to you outside of Wall Street is a really good thing. But always remember the investment standards of a wise, self-directed investor. Simple, safe, and strong. Any investment that isn't simple enough to explain coherently to your grandmother in a sentence or two, that's too complicated. Any investment that doesn't have a clear, concrete way to protect and return your capital as its chief concern, well, that's not safe enough for your capital. And any investment that can't reliably generate the financial results you need both at the conclusion of the investment and during the entire holding period, that investment isn't strong enough to justify the use of your capital. Remember, your capital must be respected. That's job number one. That capital didn't come to you freely, nor must it be given away carelessly. Simple, safe, and strong. That's the guide. That's the rule. My friends, that's all for today. But remember, if you're looking for some extraordinary cash-flowing real estate ownership opportunities, the time is now to text the word Top Picks to 33444 so I can send you information about the package of 19 properties I mentioned to you previously. Curiously, I got an email about that while I was writing this episode for you, so we may not even have that many remaining any longer. So go ahead and text Top Picks to 33444 right now to get that info. Tomorrow, I'm going to give you a powerful and maybe shocking example of how much safer your money will be if you choose to use a self-directed 401k versus a self-directed IRA. The difference is stark, disturbing, and well, you can't ignore this. So be sure to subscribe to this show on either iTunes or Stitcher right now so that you don't miss an episode. Folks, invest wisely today and live well forever.
Thank you for listening to Self-Directed Investor Radio with Bryan Ellis. Don't miss a single episode. Be sure to subscribe to Self-Directed Investor Radio right now on iTunes, on Stitcher, and at SDIRadio.com. Your feedback is always welcomed via email at feedback@SDIRadio.com. This show is for entertainment purposes only and is not intended as legal or professional advice for your situation. Content is the property of the Self-Directed Investor Society.